Give me only 12 minutes. I'll show you how to trade price action like a pro. In this video is only for beginners and even the pro traders who want to fine-tune their price action trading. So in this video, I want to show you how to read price action like a pro. You'll understand everything because this will help you to make better entries, even make better analysis in the long term. This video is going to change your life, I promise you that. Also, let me show you the key difference. You can see that we have two different candlesticks here. This one is bullish. We can see that we are moving to the upside right there, and also this one, it shows that the market is pushing to the downside. But literally these candlesticks, they are telling the same story in price action. There is no key difference in this situation because the market can even close bearish in this situation and then still move to the upside. The same applies to the bullish candlestick here, which can close like this and still make the market to push to the downside. You will see the key differences when we move forward with this video. So the main purpose of this video is to show you that the market, if you look closely at the price action, I am going to change a couple of more things in this candlesticks here to show you the differences. If let's say right now we have something like this and then we have something like this. Right now they look the same, but they're still, this one is still bullish and then this one is still bearish. But if you look closely on which volume is being set into the market, you'll understand this very clearly. Look at how the market is pushing to the downside from the high here and then from the high to this area. But when price is moving to the upside, it's pushing very, very slow. Focus on the wicks only for now on this video. You can clearly see that from the highest point of the market, we are pushing to the downside. From this high, we are pushing to the downside. Even though we have the close and the open that are different in this situation, but price action here is just the same. The market is giving us an indication that we are moving to the downside. So another thing is like this. If let's say right now we have the same candlestick like this, we have this high is around this area and then we have this low here. This goes to show that price is trying to move to the upside because we are pushing to the upside very, very aggressively. You can clearly see that we are pushing to the upside very aggressively. But when we move to the downside, the market, the high is very low here. I mean, when we push to the downside, we can clearly see that we are not pushing too far into the market. We are pushing very, very slow. That is why you see that we have a bigger volume to the upside. So this one here will help you to understand how the market is likely to behave. If you focus mainly on the wicks in the market, you'll understand price action very, very clearly. So right now, I'm going to remove a couple of more things so that you can at least try to see what I mean in this section of the video. I'll remove this. Okay. So right now, let's say we have this kind of behavior in the market. You see that we have this kind of behavior in the market. I'll delete this one. Okay. We have something like this. We open around this area and close below. But if you look at price action here, some other traders will believe that because right now we have a bearish candlestick close like this, the market is likely to push to the downside. Yes, the following candlestick might push to the downside a little bit, but that will be a retracement. Okay, I hope you understand what I mean. So on the next candlestick, the market is likely to retrace. So it will move to the downside. It will open here, maybe let's say move to the upside like this, make another wick and then push to the upside. This overall indication here will be this will be a sign that the market is likely to push to the upside based on the wicks below here. Okay, I hope you understand what I mean right there. This is just an indication that the market is likely to push to the upside because the market, when it moves to the downside, it reverses very, very quickly. That is why you see that price action is trying to push to the upside. That's how exactly you can try to understand this kind of theory in the market. And it works on all pairs. So right now, I want to show you an example on a real chart. This is not a big testing video for those who want to bite me in the comment section. This is just an information video. So right now, I want to move on to a chart so that I can at least try to show you what I mean in this kind of situations. Let me just remove everything. This is the current price action here. If you look closely, you can clearly see that right now here, look at this candlestick here. This is a bullish candlestick, but look at how the wick closed here, the market is showing a sign of reversal. That is why on the next candlestick, you can clearly see a huge candlestick to the downside. By spotting the wick below here, you can clearly see that this wick is smaller than this one on the top here. This is a sign that the market is likely to reverse. But don't use this blindly, because you have to factor in some other things like your fair value gaps, support and resistance, your trend lines. This will go hand in hand with other things. Like for instance, on this tool here from Flux chart, the supply and demand zone, you can clearly see that it will filter out some of the zones that I want to look for in the market. So in the current price section, we can clearly see that price is trying to push to the upside here, but the next candlestick is looking like it's moving to the downside. But we have this push here. So this, for educational purposes, the market is likely to push to the upside because we have this kind of huge rejection to the bottom. That is why right now we can clearly see that the market is trying to retrace and move to the upside. But this is just for educational purposes only. You will just see how the market plays out. So if you look closely here, you will see this kind of behavior in the market. You can clearly see that we have a huge rejection here, and then the market pushed to the downside very aggressively after this huge rejection, and then we have another rejection. So obviously we have two here. This is the first one. It pushed the market to the downside to close this fair value gap here, and then it made another rejection. So if this candlestick was still a bearish candlestick that looks something like this, I will consider this a change in direction of the market. The market is likely to push to the upside. That is how at least you can try to understand it. It doesn't matter the color of the candlestick here. And right now we can clearly see that the market is trying to push to the upside. So if you are lazy like me, if you want this indicator, this is how my settings here. Let me show you, because on the previous video I think I forgot to show you my settings. You can check out the detection method, sensitivity, zone invalidation. I changed some of the things I forgot which one I changed, and other things here. You can pause the video right here and then check out this indicator. And if you want this indicator, you can find the link in the description below, and also you will find their website in the description below so that you can check everything out. If you use my promo, you will get a discount of their indicators, and this will also help the channel out. And also, don't forget to subscribe to the channel. You can check out everything will be in the description below. So let's continue with the video. Let's check out on gold here, because I know most of you like to trade gold most of the time. And you can clearly see that the indicator has already marked this area here, which I can check out in the future. So here, if you look closely, I want to find a candlestick that is very difficult to understand so that you can clearly see what I mean. Here, this is the same scenario. This is the same scenario from the previous chart where the market pushed to the upside and then closed the fair value gap around this area, and then it continued to the upside. But this is a smaller move. That was a smaller move right there. And another thing, this can happen at any time in the market. That's one thing you should know. It can happen at the top or at the bottom of the market. It just depends where you got it. Here, if you look closely on this area, we have a bearish engulfing candlestick right there, and then followed by a bullish candlestick close. But look at this bullish candlestick close. It's not your typical bullish candlestick close. We can clearly see by the view of it that the market closed with a huge rejection to the downside. So that is why the next moves pushed the market very aggressively to the downside. And this is the 5 minutes time frame. But for now, I won't tell you how to enter those entries because this video is not based on that. So guys, the information that I'm giving you here is just that you have to understand the price action to the T so that you can minimize the risk of losing more trades in the market. And you have to use this like very cautiously, because sometimes I know a lot of people will just see the rejection and then enter the market. I know some of the people will do that. Like for example, they will see a candlestick close like this and then they will enter the market right there, and then they will put their stop loss here. The trade will look something like this. No, I mean to say they will enter a sell position, sorry about that, based on this, and then they will put a stop loss above. The entry will be on the close. This will be a losing trade. Obviously, this will be a losing trade, but it doesn't mean if you continue to do something like this, you will keep losing a lot, because if we look closely, we have another one right there. We have another one. Let me turn off this indicator a bit. You can clearly see that we have another one here, which is a rejection. Someone will sell, obviously on the close. this candlestick closed above, because this is a bullish candlestick, then they will target the lows here. But this is not an entry strategy, guys. I'm just giving you information. You don't have to do some crazy stuffs in the market will bully you. So I guess this video was very informative, because this was just a quick video just to show you how the market is likely to behave. And for transparency purposes, let's go and check out the previous pair that we were looking at in the beginning of the video. That was Euro CHF. Let's go and check it out. We can clearly see that the market is still pushing to the downside. So basically, that is why I said don't use this kind of behavior blindly. You have to use it maybe starting from the higher time frame, move on to the lower time frame to make at least your entries to be better. The weeks will always tell you something, no matter the time frame or anything. Let me just move on to another pair like EURUSD and see, you'll see those kind of behaviors in the market. Here, this is the current price action of the EURUSD on the 5 minutes time frame. And for those who, I know a lot of traders will do some silly stuffs in the market. For those who are going to use this blindly and start buying when they see a huge week in the market or start selling, let me show you how many trades you could have lost in this kind of situation if you are doing for every candlestick. If we start from here, let me turn this on a bit. Let me see. For a long position here, someone could buy here. This is a losing trade, obviously, for those guys who use trade stop losses. Obviously, this is a losing trade if you are aiming for this high. And then obviously we have another trade here. This is a long position. Again, obviously, long stop loss here, target this high, or maybe to close this fair value gap around this areas here. You can start from the beginning of this candlestick, but obviously price even closed it. So that means you have one losing trade and one winner. Even on this area, let me turn this indicator off for a bit. This is an indecision candlestick here. You can see clearly that price is obviously fighting for its life. You can clearly see that this price action looks the same. But obviously, if you're going to take a sell, obviously you can see that this candlestick and this one, they're different. And then you're going to look for something like this. It's something like this, guys. Something like this. If you are targeting this low here, this previous low, that means this trade could have been in profit very easily. And sometimes the market can be very, very tricky, like in this situation where you have a lot of weeks. But if let's say you enter the market with this candlestick, because we will never enter the market at the same time as traders, we have different times of trading. That means you could have profited, but this bullish one could have lost. This one could have been a winner. This one could have been a winner. This one a loss, a loss, a loss. Because I know some of you will take every candlestick you see, and then this is a winner, a huge win to the upside. So that means overall this is like 1 2 3 4 losing trades from today, and then we have 1:7, 1:3, and other trades from here to close the fair value gaps. Even this one, if you are holding the trade, could have gained you more than 40 pips. But this is not a video about that, because you can see them a lot. Even in this area, you can clearly see this kind of price behavior in the market. Even this one could have run in a loss, because we already know we will never trade at the same time, and we don't see the market the same, because someone could have said this is an order block right there, and then they will sell right there and then put their stop loss above the candle or even above the high. But because we don't even enter the market and manage the trade the same, someone could have been in a loss, been in a profit, and then without noticing, this move happened. This is a quick move, so you just have to understand that when you're trading. I think basically that's all for this video. I hope this video was very informative. If you want to check out the indicator that I'm using, you can check out the link in the description below. You'll find every information and every detail about this. And also, if you want to follow up, or you want me to build a strategy based on this information of this today's video, you can also comment below, and also don't forget to subscribe to the channel. I guess this video was very informative, guys. I guess I'll see you on the next one. It's just that my schedule is very busy at this moment. That is why I'm not even posting setups a lot in our Telegram. But obviously the festives are coming, so we are going to be free in the market, so more setups. And then also, if you want to learn from me, you can also contact me on Telegram or even on the email. You'll find every details and every information if you contact me on the email or the Telegram, that you are going to find the link in the description of this video or even this channel. There is no other way that you are going to contact me, and I'll never contact you. So I guess I'll see you on the next one. Always stay safe, stay blessed. Always use a stop loss to avoid unnecessary losses in the market.